A probability trading indicator. With real-time artificial intelligence, Theta 45 is a complete trading strategy, based on predicting the next closing price.
In the last episode, we learned how to use Theta 45's probability indicator to generate an unlimited number of simulations to predict the stock price for up to 256 days in the future. In this episode, we look at the price time chart. You can zoom into and pan across the chart by pinching and sliding your fingers across the screen. The refresh button updates the chart with the latest price if the market is still open. And adjust the blue slider to control Theta 45's forecast model and the number of days displayed on the chart. This is no ordinary price chart. The price time chart tells you if the price, from the beginning of the forecast period, is projected to double in value in 1, 2 or 4 years. The curved, orange line that starts from the beginning of the forecast period to the end is the daily growth trend. This is the daily growth rate of the stock if it grew at a constant percentage per day for the duration of the selected forecast period. But, just as you have a linear price and date axis, you can also curve the surface of the chart and produce a set of curved axes, similar to the longitudinal lines on a map that emanate from the North Pole. The middle straight line is the zero growth projection line, which shows that there has been no growth in the stock price across the forecast period. The curved lines above the zero growth line? These are the doubling projection lines, which tell you if the stock price, from the beginning of the forecast period, is projected to double in 1 year, 2 years, or 4 years. And the curved lines below the zero growth line? These are the halving projection lines, which tell you if the stock price, from the beginning of the forecast period, is projected to halve in value in 4 years, 2 years, or just a year. If the orange daily growth trend is in line with one of the doubling or halving projection lines, then the stock is currently growing at a constant percentage rate to double or halve in value in 1, 2, or 4 years. If the price touched any of the projection lines during the selected timeline, then it was on course to double or halve in value in 1, 2 or 4 years. Using the linear date axis, if the price remained stable after an initial increase, the price would be at a constant distance away from the zero growth projection line. But in the curved space, the price would eventually cross the 1, 2, and then the 4-year doubling projection line as the daily growth rate of the stock decelerates. Alternatively, if the price remained stable after an initial decrease, the price would still be at a constant distance away from the zero growth projection line. But in the curved space, the price would eventually cross the 1, 2, and then the 4-year halving projection lines as the daily growth rate of the stock stops decelerating. There is much more to the price time chart that is useful for all traders and which we will discuss in future episodes. But in the next episode, we continue with Theta 45's user guide and move on to the percent screen.
Subscribe to our YouTube channel for more trading strategies with Theta 45. And smash that like button if you found this video helpful. Theta 45 is available to download. Use the link in the description and create your own trading plan now.